Wait, hold on. Oh no, it's got to be under 66.30. Yes. Woohoo! Fuck you, Bob. Get wrecked. All right, where were we? Bob's is jealous of my $9 in profits. It's all right. He'll get over it. Can you look at Jimmy? Why would it do? It looks fine. It's doing really boring shit, but it's also going up. It's going up in like a not dramatic, boring way because there's 400 million shares now. All right, so closed a bit, quite a bit above the market maker's expected move for the day. A little bit above mine too. Filled the gap up at 57.70 that was left over from Friday the 7th. Just kind of tapped that and then closed a little lower, but that's a fairly good start to a recovery here. We are, however, we did reject on the breakout of the prior trend, which is like down here. Failed that, so we get a new trend. We broke out above that, and then also failed that breakout as well. But this may continue to push up throughout the night. I think as long as it can hold above 5,800, there's a decent amount of support built up here. And then we'd be looking a little bit further out to the upside, around like 59.25 for the next level of maybe significant resistance to the upside on futures. If this fails, and it fails like 57.75 to the downside, it could retreat back. But there's a couple layers of confirmation there before anything gets too bearish. Yields up all day, quite a bit. So we're seeing that we're seeing treasuries get shorted down across the curve. We're seeing leverage up on the carry, and dollar up. And so this is an expansion of available margin, and we're seeing that replicated over on SPX, with a 171 basis point move to the upside today. Commodities coming down a little bit. Looks like gold, silver, copper. Oil was up, mostly on some geopolitical news, but OPEC is supposed to start increasing output tomorrow, I believe. Carry trade leverage up to 8.85, 0.25, yeah, 0.25 increase over Friday's close. But we're not seeing leverage really pick up at the short end. We are seeing the forward yield of volatility fall. That's now down around negative 3.26, which is the first time we've seen a negative print on that since Feb 27th. I think we slipped negative on these days, but I don't think we closed any of them negative. But, turning around volatility a bit. Bond vol may have picked up with the bump in yields today, but correlation on the 3-month continuing down pretty sharply today. That should see a decline in bond vol as well. Skew picked up on Friday, probably more so today. We're going to see a little bit less out of the money demand for puts. It looks like breadth is pretty solid on this. Dow's lagging behind a little bit, but Russell picking up. So I think RSP had a pretty decent day today, yeah, up around 1%. And so we'll probably see a few more stocks move above that 20-day moving average. Correlation is still falling really slowly, especially given the like 9% decline in VIX today. You'd kind of expect correlation to be down more. So it may be that there's still just a lot of demand for long volatility. Maybe out in like maybe out on like the July or June contracts, but it looks like, the April contract is around like 915. So, yeah. I think I would expect volatility shorting to be a little bit harder here, but I guess 3-month volatility is still around 19. So Fed fund futures pulling back a little bit, with the slightly higher prices in this morning's PMI report, and expansion in the services sector. We're going to see a little bit less likelihood of Fed rate cuts in the latter half of this year. This is the September. So, moving a little bit back towards like 1.5 cuts by September, and the bear steepener flat on the day, so 10-2-year spread staying perfectly even open to close. All right, so out here, Something notable about last Friday was that we closed above the 20-week, 20, 50, sorry, 50-week moving average. And today we broke out above it, uh, with the next, upside target being the 20-week moving average out there at around 59.47. But on the daily, we still have one more pretty important target to the upside. Actually, I think we're just a bit above it today. 57.52. Yeah, so we broke above the 200 MA. That'll give us, an upside target around 5,900. There is a little bit of there's like a little bit of a trend here that we might test around 58.50. But I think the significant levels to the upside to pay attention to here are going to be like the Jan low, 57.73, which we did break above today but failed. Now I'm not sure if that failure is going to persist out into tomorrow. We'll probably push up above the Jan low, and then above that, like 58.37. Now more likely 58.78 were fairly important upside targets. And then 950, above that, like 60.30. So definitely a decent start to reversal here, but there's still going to be a few levels that are important to the upside still. And I think the biggest locally is going to be 57.73. On the option side of things, that's we've got SPXW, delta neutral and gamma neutral, both around the 58.30 level right now. Obviously, delta and gamma are still going to be negative as far as exposures go here, but getting a little bit closer to positive. And these are still, delta kind of flattened out, but gamma's still coming down. It's a little bit under DN, which is usually a fairly bullish signal on rising prices. And so we will be looking for, Vega neutral to start coming down as more and more volatility shorting piles in, and gamma max to also move down as, position starts to concentrate to the upside here. Now, that might mean that gamma max actually moves below the prior high by the time we get up there, but I'm not really sure we're going to get a full reversal back to the all-time highs, and we still have a lot of, macro data that's going to need to get sorted through this week. But the return back to the Jan low is definitely a good start, and a move back above gamma and delta neutral on the monthly is gonna probably help at least support things until we get out to the tariff decisions next week, or the labor data prints, which will also be coming up pretty soon. And those are going to be very important, provided durable goods, GDP, and PCE don't have any major shocks. Anyway, that's it. Thank you guys so much for tuning in, and I will see you bright and early tomorrow. Later, everyone.